Hi everyone, I'm Tina Trevino, Partner and Director of Community Relations for Latin Business Today. As small businesses continue to face the challenges of the COVID-19 health crisis, Latin Biz Today and Popular Bank have partnered up to bring you Driving Success Through the Pandemic, a 9-part virtual discussion series addressing some of the most pressing issues faced by small businesses today. Popular Bank's Chief Operating Officer Manuel Chinea and Latin Biz Today Advisory Board member Mendoza sit down to share their industry insights, tackle some of the challenges and opportunities, and best practices for small business and entrepreneurs. In this segment of Driving Success Through the Pandemic, we'll be discussing the importance of capital infusions and emergency funding for small businesses as they continue to face the operational and financial challenges amid the COVID-19 health crisis. Thank you for joining us. We hope you enjoy the conversation.
Welcome to Latin Biz Navigating Business Success Through the Pandemic series. This is our third segment, and my name is Manuel Chinea. I'm the Chief Operating Officer of Popular Bank, and with me today is
Mendoza. I'm a partner at Cirrus Capital, and I'm a corporate and board advisor at Latin Biz.
Okay, so the topic for our third and final segment is how can small businesses prepare to seek financing options and opportunities, financing and liquidity options and opportunities amid health crisis. And let me kick this off first from the bank perspective, and then Eli will talk a little bit more about the market in terms of other sources of capital. From a bank perspective, obviously, the critical thing here in terms of how to prepare to seek financing options in the middle of this pandemic is first to try to inform yourself as much as possible what's available. Obviously, you can do some research online and try to understand what's available out there, but also contact your financial institution and they'll be more than happy to provide you information in terms of what's available and what are some of the options. I think that when you're contacting a financial institution, it is critical that you come prepared. One of the critical things here that, and I think we touched on it in the previous segments, is that you really need to have a great handle on your numbers. You need to understand your operation, your numbers. You need to understand your cash flow very well, and you need to have very robust financial reporting. Whenever trying to secure financing, that's one of the critical elements in any financing transaction, is that the bank obviously doesn't know your business as well as you do. So the way that the bank gets to know your business is through your financial reporting and any additional color that you can provide in terms of a business plan. You have to put yourself in the shoes of the financial institution. Again, the financial institution at the end of the day is tasked with, yes, lending this money, but securing the repayment of that money. So the bank will need very good information so we can determine that there is a source of repayment of that money. So again, having very good financial reporting, if you have a business plan, that is always a very strong positive, because banks want to know what are you thinking, especially in the middle of what we're going through. A lot of small businesses have had to adapt and make a lot of changes. So revenue has been impacted. So the past is not necessarily as much an indication of the future as it used to be. In a stable environment, when you are looking at financials, you kind of predict, okay, this is how the business have behaved for the past 2 or 3 years, so we can extrapolate that the business will continue to behave that way. What happens in a situation like today is that obviously there's a tremendous amount of disruption. If you're in some of those businesses where you had to close your operations for a prolonged period of time, your revenues have been dramatically impacted. So all of a sudden, the big concern of the bank is, okay, even though they were doing well all the way up through the end of 2019, in 2020, they've been impacted this way. So how's the future going to look? Are they going to be able to get back to the way it used to be? So having that information and that vision available and documented when talking to a bank, I think it's something that can help you tremendously in securing that financing, building the confidence in the bank that yes, this is a temporary setback, but they have a very clear plan and path to getting back to the way it was. And as a result, I think that you enhance your chances of securing that financing. And again, I think that, and we touched on it on the previous segment, that because of all this uncertainty, I think that without federal guarantees, government guarantees, or the government serving as a backstop, banks would be more strict and more conservative in their approach because, again, there's a lot of uncertainty in terms of can these small businesses get back on their feet after through this pandemic. But as we share in the previous segment, there was the PPP program, the Paycheck Protection Program. There is a program that is still active and running, which is Main Street Lending Program, that those programs give, because they have the backing of the federal government, give commercial banks the confidence that, okay, this is a business, they are going through a setback right now, they have very good reporting, financial reporting, they have a good business plan, and now with the backing of the government, feel more confident in helping these organizations. Now, don't get me wrong, I also know that there are some small businesses that because of the nature of their business during the pandemic, they've been doing well. Their revenues have not been as affected. And obviously, the pandemic, depending on the type of business, might have presented opportunities for them to grow. And they might need liquidity for a different reason than businesses that are struggling. They might need liquidity because they want to expand. They have a lot of demand for their products, and now they need liquidity just to expand and grow their business. And certainly, those are businesses that can come to the bank, and similarly to what I said, the reporting and the business plan and laying out what they're trying to accomplish, I think can secure credit without any type of government guarantee. Right. So those are things that the companies, I think, need to look at and work on as they get ready to go to a financial institution to try to secure financing. Any thoughts on that, Eli?
That's very, very comprehensive. I think that's great advice. Looking at the equity side, I would say a business plan is a must. So as you take a step back and you are, again, looking at different alternatives, equity is one of them. But again, a very strategic and a different kind of decision, because in raising equity, you're going to give up part of your ownership. There are sources of equity that specialize in helping businesses grow through difficult situations, as well as helping businesses accelerate growth, again, through maybe this situation or generally in the market, because businesses happen to be positioned well for what's coming in terms of next generation products and services and customers. So you will find that equity exists for a bunch of different problems that a small business is looking to solve. So important to have in your mind a clear understanding of what is your business, what is your market opportunity, what do you deliver as well as or better than others in that market, and why are you excited about the opportunity, if not today because of the challenges of the pandemic, in the future, or if today because of the challenges of the pandemic, explaining what it looks like afterwards. So that business strategy, business plan, very, very critical. For you to understand and for you to be able to articulate very crisply and very cleanly to folks that are in a position to potentially be your partner. From an equity perspective, again, because you are giving up ownership, right, or some level of ownership, you also have to decide for yourself, what is it that you need that's more than just capital? Do you need a partner that is perhaps an expert in a new market that your business is trying to penetrate, either, a new geography, a new city, or is it a new service that makes sense for you to offer because your customers have been asking more about it, but you don't know as much? Is it that you're looking really just for capital and you want somebody to be silent, excited about your business opportunity, but more silent? Is it, that you want somebody that has a big network and can introduce you to a number of people that can bring you new ideas, new ways of seeking customers, new suppliers, or just can elevate your brand generally? Those things are important to consider, because you will find that more often than not, when you reach out for equity financing, you will have a number of interested people. And it's for you to decide, where you want to narrow that target of folks that you're going to consider. And so your partnership needs are very, very important. And then we go back to the previous segments, right? It is absolutely positively important that you are able to talk to somebody about where you are today relative to your finances and relative to your position. Equity investors by nature are more optimistic. So they will, if told the story in a positive, logical, and analytically supported way, they are inclined to get excited with you. But we'll need to understand that you actually have the financing and the operational things in place to be able to reach those goals and reach those objectives, or at least that they can help you do that. But you have to have some basis by which you approach them. And I would say that understanding your financials and being able to articulate your story through those financials is a very, very important element of it all. And so there's a good number of sources that are out there, right? I'm not going to name specific sites or specific, venture capitalists or merchant banks, but if you do your research, right, and I think this is where financial advisors, bankers could also be helpful, you'll find very quickly that those that know you the best can gravitate you towards people that are like-minded and that actually have the capital and may be, excited not to take the business from you, but to grow the business into something bigger that both of you could share. Yeah. That's what I'd say on the equity side.
Yeah, and you brought up a good point that I didn't touch on that I think that it's very important. And you talk about, the transparency of, making sure that you can be optimistic, but at the same time, you want to be transparent and realistic about what you're thinking. And that's very important when trying to secure financing, because you come with a pie in the sky type of plan, or if you present projections that just seem too rosy, you lose credibility with this institution, and that's not something that you want. And the other thing is that if it's an existing financial institution you've been working with and you already have some type of financing, I think that banks know that right now we're in the middle of a crisis and that most companies have been negatively impacted by the situation. So I think that it serves you well to be very proactive and transparent with your financial institution and come up and say, hey, listen, this is what's happening in my business. I know I'm confident I can overcome it, but I need some additional liquidity for a period of time to tide me over to hopefully 6 months, 12 months when the situation has normalized. That's a lot better position to be in than wait for you to not be able to meet an obligation. And then at that point, after you fail to meet an obligation with your bank, then tell them that you're in trouble. You don't want to be in that situation because typically, your bank might still be willing to work with you, very likely, but it still goes to the issue of trust, and it undermines the trust with your financial institution. So the earlier you raise your hand and you say, listen, I'm having some issues and I might need some flexibility here. What can you offer me? How can you help me? Yeah. Banks will appreciate that. I know that we will. And we certainly are going to be eager to work with you and try to figure things out. Right. So I think that's an important point, and I forgot to mention it, but thank you for reminding me.
Look, I think transparency and trust, right? We could probably not close on a better, set of words, I think, with respect to all of what we talked about.
Absolutely. It's been great. It's been a pleasure.
Great.
Eli,
likewise.
Doing this panel for these series in Biz.
Yeah.
And thank you, everybody.
Thank you.